Booyah! On January 6, 2026, the Australian stock market was business as usual, until BlueScope's stock went ballistic. In a single day, shares surged 21%, closing at a price not seen in 17 years. When a blue chip like BlueScope rockets like that, you know something seismic is happening. The cause? Not a new invention or a lucky find, but a buyout bid. A massive, all-cash, 13.3 billion Australian dollar offer landed on BlueScope's desk. This was no rumor. Two heavyweight bidders wanted to take BlueScope private and split it up. Deals like this reshape industries overnight. It's not just an acquisition, it's a cross-continental play that could shift the global steel landscape. The news sent shockwaves through Australia and the US, with investors eyeing a huge payday. Phones rang off the hook, analysts scrambled, and everyone wanted to know, who are the buyers? What's their plan? Will this deal actually close? This is a masterclass in corporate strategy and timing. It's a tale of two continents, two companies, and one massive prize. For everyone involved, the game just changed. This isn't just another Tuesday. It's the day BlueScope's future was thrown into play, and you better believe we're tracking every move. Let's meet the power players behind this $9 billion move. First, SGH, 7 Group Holdings, run by the Stokes family, one of Australia's most influential business dynasties. Kerry Stokes built his fortune in media, but now SGH is all about industrial muscle. CEO Ryan Stokes is aggressively expanding their industrial empire, fresh off acquiring Boral in 2024. Now they're targeting BlueScope's Australian operations to double down on their bet on the nation's future. On the US side, you've got Steel Dynamics Inc., a top American steel producer based in Indiana. They're known for efficient mini-mills and sharp strategy, led by CEO Mark Millett. Steel Dynamics wants BlueScope's North American assets, which sit right next to their own. This is classic consolidation, boosting production, cutting costs, and grabbing market share. Together, SGH and Steel Dynamics are a formidable team. Local expertise meets global ambition. SGH handles Australia, SDI takes North America. Both have heavyweight advisors, Barrenjoey, Goldman Sachs, and JP Morgan, signaling they mean business. This isn't a casual bid, it's a serious strategic play. The pairing is perfect, each gets what they know best. When these names are in the mix, you know the stakes are sky high. So how do they plan to pull this off? Simple divide and conquer. The plan is to buy all of BlueScope, then split it by geography. SGH takes the Australian operations, Port Kembla Steelworks, coated products, and distribution. It's a seamless fit with their industrial portfolio. Steel Dynamics gets the North American assets, especially the North Star mini mill in Ohio. For SDI, it's a dream, expanding their footprint and absorbing a top-performing mill. This clean split avoids messy cross-border integration. Each buyer gets what they know in the market they dominate. SGH becomes king of Australian industry. SDI fortifies its US stronghold. It's a win-win, and the $30 per share offer banks on shareholders seeing the logic. Bold, clean, and powerful. Why BlueScope, and why now? For Steel Dynamics, it's all about geography. BlueScope's North Star plant is practically next door to their Indiana base. Owning it means streamlined logistics, more market share, and a stronger US steel position. It's both a defensive and offensive move, locking down the Midwest and boosting profits. For SGH, this is empire building. After Boral, BlueScope's Australian assets are the next step in dominating the nation's industrial landscape. It's a bet on Australia's future, controlling the steel that builds everything from skyscrapers to homes. Adding BlueScope to Westrac and Boral creates a vertically integrated powerhouse. The Stokes family wants to own the backbone of Australian industry. It's a strategic vision to build an industrial champion. The market's first reaction? Pure excitement. A 21% stock jump says it all. $30 a share in cash is a golden ticket for long-suffering shareholders. Analysts call the bid opportunistic, but see real value in splitting BlueScope's assets. The sum of the parts could be worth more than the whole. But is this the final offer? Probably not. Investors and analysts expect the bidders will need to sweeten the deal to win over the board. The first bid is rarely the last. Now the poker game begins. The buyers are credible, the logic is sound, but the price may need a bump. BlueScope's board, with UBS advising, will push for the best outcome. Negotiations are just starting, and the ball is in BlueScope's court. The market is cheering, but the real action is behind closed doors. Will the bidders come back with a knockout punch? This isn't BlueScope's first dance with suitors. Steel Dynamics has tried before. This is their fourth approach. They've had their eye on the North Star mill for years, and they're not giving up. Previous bids were close to the current offer, showing how determined they are. This time, they've teamed up with SGH, added more cash, and restructured the deal. Now, they're asking for exclusive due diligence, a 4-week window to dig deep into BlueScope's books. If granted, it signals serious negotiations and keeps other bidders at bay. The persistence of Steel Dynamics puts pressure on BlueScope's board. They know the buyers are serious and well-informed. This isn't a fishing expedition, it's a targeted strike. The question, is this fourth bid finally too good to refuse? The history suggests the bidders won't walk away easily. A resolution, one way or another, feels inevitable. Money and strategy aside, what about BlueScope's workers? Buyouts often mean synergies, code for job cuts. SGH and Steel Dynamics say they'll keep current leadership in place for continuity. But details for the broader workforce are vague, creating uncertainty. Employees and unions want concrete assurances on job security and investment. The coming weeks will be crucial for the human side of this story. Unions in both countries will push for commitments on jobs and benefits. The Stokes family faces public scrutiny as custodians of an Australian icon. Steel Dynamics must reassure Ohio's skilled workers. Winning trust on the factory floor is a whole new challenge. What's next? BlueScope's board holds the cards. They're reviewing the offer with UBS, weighing every angle. The key decision, grant exclusive due diligence or send the bidders back to the drawing board. If granted, SGH and SDI get 4 weeks to confirm their numbers and finalize financing. If rejected, the bidders might walk or come back with more cash. The board must balance risk and reward, aiming for the best deal for shareholders. If a final offer is reached, shareholders get the ultimate vote. With the stock at a 17-year high, pressure to accept is intense. The next month will be a whirlwind of negotiations and strategy. The fate of a steel giant hangs in the balance. The clock is ticking. This $9 billion BlueScope bid is more than a deal. It's a blueprint for the future. Instead of a messy merger, it's a clean carve-up, putting assets in the hands of those who can maximize them. The Stokes family builds an Australian industrial empire. Steel Dynamics fortifies its US fortress. For investors, it's a long-awaited payday. For employees, the future is uncertain. Job security and investment are key concerns. For the industry, it signals a shift toward regional consolidation and local dominance. This deal could inspire similar moves worldwide. If it goes through, it will reshape manufacturing in Australia and the US. The stakes are high, the players are serious, and the outcome will echo across the industry. Don't touch that dial. Booyah.